Rajesh Sharma is the managing director who's joining us right here in our studios. Thank you so much for taking time out. To begin with, let's start off with the backdrop that we're looking at. There has been that marked slowdown in consumption. You know, everyone's talking about a lift in sentiment. What is it that you're expecting from the budget in light of where we stand?
I think what government is required to do is to boost the consumption by spending, and more particularly in the areas where it has a more multiplier effect, which is semi-urban and rural sector. And besides that, to leave the more cash in the hands of consumer, if their personal tax rates can be reduced and lowered, that will also spur the consumption. I believe to achieve our Prime Minister vision to achieve the 5 trillion economy, consumption boost is important, is equally important is to revive the private investment-led growth.
Sure. The government's also looking at TARP-like mechanisms for NBFCs, HFCs to help them revive. Do you think there could be possible benefits or do you also see negatives of using this?
My personal belief is that NBFC sector, which were struggling to get the liquidity has come back. Banks in last 6 months has opened the lines for all the those NBFC and housing finance company which have a major focus on the retail lending side. So if we see, are there any specific and greater challenges in the asset quality with the NBFC and housing finance company? I don't think that we need this kind of a measure. If liquidity remain in the system and banks remain open and they have seen that there is no major surprises in most of the NBFCs, so I think liquidity coming back, this measure may not be required. What is required, how they can get the funding, how the bond market can be revived, where even NBFC housing finance company can also access there, how rating companies can take a little relaxed view instead of a very stringent view on the rating side, which can reduce their cost. Demand side of the loan, as I said repeatedly, that it is intact. So liquidity coming back, I don't think that NBFC and housing finance sector will need such kind of measures. What is required there, how their cost of fund can be lowered.
Okay. Do you think that, the big debate everyone's having right now is growth over fiscal prudence? You've clearly said you do want the government to spend to revive the economy, but what more do you think that they can do to really help to kickstart growth?
I think government has a constraint on the fiscal side, so they can do limited on the fiscal side, but they can do very much on the policy side and the non-fiscal side. So I believe, to revive the private investment-led growth, we need to think and we need to announce and after working out the long-term financing model. Today, what is happening in all infrastructure projects and other large projects, banks are not lending more than 10 years. Now, a promoter who puts the money, it is very difficult to match the bank repayment from the cash flow within 10 years. And that is one of the major reasons the bank loans are going for restructuring. But banks today are not lending beyond long-term loans. So either we have to come out with the development financial institution again, or you have to work out some mechanism where long-term financing is available, 20-year, 25-year kind of financing. As we see in the overseas market, you can borrow even 30 years money, but which is not happening in India. And that is the major reason that when you start the project, you put 20 or 30% equity. After 5 years, you put more money in the project to meet your cash flow demand towards the repayment.
For the financials as well, there is buzz that there will be no further bank capitalization coming in for some of the PSU banks. How are you reading into this move?
I think once these merger exercises are over, the banks, weaker banks are getting merged with the stronger banks, and most of the provisioning at the bank level is already happened in their profit and loss account. So I don't think major surprises will come the losses side and NPA sides. Having said that, they may not require that kind of a capitalization also. I think government will focus PSU bank to more focus on improving their operating profits.
Sure. It seems like it's a given that the government is going to breach their fiscal deficit target. But do you think that's going to be challenged for growth? Because that is one messaging which I think just about every faction of the economy, including equity markets, are looking out for.
As I said, I think the government is constant the fiscal side because of deficit, because of the revenue, the income tax collection also had not been that great this year, though GST has been improving quarter on quarter. But there a lot can be done on the policy side, I believe.
Okay. Getting a move on, there is also a lot of expectation, with respect to the real estate sector, the kind of pain that we've seen there. What kind of measures or what kind of a boost are you expecting for the flailing real estate space?
So real estate sector, a lot of money is stuck today, whether be it investor, be it a banker, be it a flat buyer or the ultimate consumer. What is required, one of the measures is, can banks be allowed to give one-time restructuring? That will open a lot of door for stuck projects to get the refinancing back. While government has come out with the stress fund measures of about 25,000 crore rupees, and that will address a very limited need looking at the size of entire problem. So if the one-time restructuring can be done, and for the Pradhan Mantri Awas Yojana, the middle income group subsidy is coming to end in the March 2020. If that can also be increased for another 3-4 years, because there is a lot of demand and a lot of gap in the housing sector. So real estate sector side, I think this one-time restructuring is something is required to infuse the liquidity. Today, liquidity is completely missing in the sector.
All right. Thank you so much for dropping by, giving
Thank
us
you.
a sense as to what you're expecting from the budget this time around.